The topic of today's discussion is bank reconciliation statement. You know what is bank reconciliation statement? It's a statement which reconciles the difference between balance as shown by cash book, bank balance as shown by cash book, and balance as shown by our passbook. You know, now in normal circumstances there should not be any difference between the two balances, but actually in practice there is almost always this difference. Now, what are the causes of this difference? You know, sometimes when we deposit checks in the bank, they get cleared after some time, and maybe on the date when we are making this bank reconciliation statement, those checks have not cleared. This is one reason. And another could be that when we issue checks, the moment we issue check to any party, we make entry in our cash book, but in the passbook, entry is made only when that check is presented in our bank and cash goes out of our bank. So this could be another reason of the difference. Then sometimes bank charges some charges from us, bank charges, etc. Now we come to know of that only when we receive the passbook from the bank, and later on we can put entries in our books. But till then we are unaware of it, and it could be a cause of difference. Sometimes bank pays us interest. Now again same case, we come to know about it only when we receive the passbook. Then because of interest given by bank, but we have not taken credit for that in our cash book, this difference will come, right? And sometimes we have given standing instructions to our bankers for making certain payments, like maybe for our insurance, insurance of vehicle, etc. Or there could be other periodical installments going for which we have already authorized them to make payment on a due date. So if they have made the payment, but we will make entry in our books only after receiving the passbook from the bank. Again, a cause of difference in cash book balance and the passbook balance. Similarly, certain cash entries, people deposit cash in our account direct, and we come to know about them, though actually we should come to know about them from our customers who deposit in our bank. But could be there is sometimes some communication gap, and we come to know about the receipt in our bank account only from the passbook. That also causes some difference. So these are the main reasons why our cash book balance and bank passbook balance don't tally. And to find out the reasons, we have to proceed in such a manner. We have to compare both cash book and passbook, and then come to know the reasons why these two balances are not tallying. Let us proceed to see how it happens. Now this is the cash book, that is the only bank column of our client, okay, and this is the passbook received by them for the same period, that is for the month of January 2012. This is the passbook, okay. Now after comparing only, we will come to know of the reasons why both these balances are not tallying, because passbook is showing a credit balance of 9,600, and credit balance in passbook means a positive balance, okay, because this is our account with the bank, okay. So whenever bank receives money in our account, it credits our account, and whenever it makes payment on our behalf, they debit it. So it means if there is a credit balance, it's a positive balance. Similarly, in the cash book, this is showing a balance of 11,500 on 31/1/12, as against 9,600 shown by passbook. Now we have to reconcile this difference. Let us start with first our receipt side. Now this receipt side must be compared with deposit side of the passbook, okay. Let us start with passbook. So cash has been deposited on 1/1/12, 10,000. It appears in the cash book also. So we can tick both the accounts. Similarly, 5,000 rupees receipt from Naresh. Again, it is showing in the passbook. It is also being shown in the cash book deposits or receipts. Okay. Then there is 2,000 deposited by Suman. This 2,000 is not appearing in our receipt column of cash book, so it will remain unticked. Again, on 27/1/12J, 2,500. The check deposited by us of J has been credited to our bank account. So again, this will be ticked on both sides. Then there is this 200 interest credited by bank in our account, but there is no entry for that here. Okay, so here are two items, 2,000 and 200, which are increasing the passbook balance, but which are not there in our receipt side of cash book. Okay, similarly, there are two items here. Now these are the checks received from Mary for 1,500 and from Nikhil for 3,500, which we have deposited in the bank, but bank has not given credit for that. They don't appear anywhere here. Okay, now this is causing a difference. Now let us move to the payment side, and payment side of cash book will be compared with withdrawal side of the passbook. Now 3,000 Ram's check has been encashed. Okay, now this 3,000 appears here as well in the payment side of cash book, so both will be ticked. Similarly, this 100 bank charges 100, this is appearing in the withdrawal column, that bank has charged 100 rupees from us, but does it appear here? No, this 100 does not appear here. Okay, it will remain unticked. Now this cash has been deposited on 18th, 2,000. Yes, it appears there as well, so both will be ticked. Okay, 4,000 LIC on 21/12. That means on the standing instructions, 4,000 has been paid to LIC, but no payment has been made here. That means we will come to know about this payment only on receipt of passbook. So this item again will remain unticked. Okay. Now on 31/1/12, Sohan's 1,000 rupees check has been encashed by him. Let us see, it is there also, Sohan. So again this will be ticked on both the sides. Now this side has finished and there are only two items, bank charges and payment to LIC, which remain unticked. That is, now this withdrawal, bank is showing withdrawal. Okay, that means it is reducing it is creating a difference of 4,100 between the balance shown by cash book and balance shown by passbook. This is 4,100. Now let us see the payment side. On the payment side, we have issued check to Manoj for 1,900, to Ahmed for 3,100, and yeah, these two checks. But these two checks have not been encashed by these parties because they don't appear on the withdrawal column of the passbook. So this is again a cause of difference between both these balances. Now let us understand how it affects. Though in the format we will make the bank reconciliation statement later, but let us see just for our understanding how it works. Now I will show you how these differences we can reconcile. Though later on I will prepare the proper bank reconciliation statement, but let us first understand. If this is cash book balance, how much? 11,500. Okay, let us see what are the items which are creating a difference, because of which passbook balance is more. Okay, let us see the deposit column of passbook. Here are two items which are unticked. This means bank has given credit for 2200, for which we in the cash book have not taken the credit. So if we add this 2200 to 11500, we will reach to this balance. In the process of reaching this balance. Okay, so add 2200. This is one cause. Another cause is that we have made payments to Manoj 1900 and Ahmed 3100, total is 5000. Now, the moment we made these payments, we reduced our balance. But bank has not reduced, because bank will reduce only when they will make payment. So this means if we add back to cash book balance, we will reach, or we will be in the process of reaching to this balance. So add 3100 and 1900. Okay, now these are the items which we must add to cash book balance. So it comes to how much? 18,700. Now let us see what are the items which we must reduce from cash book balance so as to reach balance shown by passbook. Okay, now let us see the withdrawal column. Here are two items: bank charges 100 rupees and payment to LIC 4000, which though are being shown in the passbook, okay, but we have not paid payment for this. It means what? If we reduce these items from our cash book balance, we can reach here. So less 4100. Okay. Now we move to receipt side of cash book. Here we have deposited two checks of Mary 1500 and Nikhil 3500, which amounts to 5000, but for which bank has not given us credit. Okay, so that means if we reduce this item from 11,500, we will reach 9,600. Let us see. Less 5,000. So from 18,700, if we reduce 9,100, we reach 9,600, which is what? Balance as per passbook. Actually, this is the way we have to go about. Now I will show it in the format. Now let us prepare the bank reconciliation statement for January 2012. We are starting here with cash book balance. Though we can start with any balance, we could have taken passbook balance and then reconciled that to cash book balance. Okay? So now let us start with this. Now balance as shown by cash book is 11,500. As we have seen previously, on comparing the passbook and cash book, we found certain items which were either not in cash book or they were not in passbook. Okay, so they were the causes of the difference. Okay, let us account for each one of them one by one. Okay. You see, Suman has deposited 2,000 in our account and we came to know only on receipt of passbook. So this shall be added to cash book balance. Add amount directly deposited by Suman. It is 2,000 rupees. Similarly, bank had credited 200 as interest, which again was not in the cash book. So we shall add that item also. Interest credited by bank 200. And we had issued checks to parties for 3,900 and 3,100 and 1,900. Total amounts to 5,000. Now those checks again have not been encashed by those parties. So that means our cash book balance has reduced because of that. Okay? But if we add back those items, we will reach the passbook balance. So again, under the item add, checks issued but not encashed, 5,000. Okay? Now there are certain items which we must reduce from our cash book balance. Now what are those items? If you remember, bank had charged 100 rupees as bank charges, which we had not taken in our cash book. So first item is bank charges, 100 rupees. They will be reduced here. And on the standing instructions, bank had paid 4,000 for LIC, and which we had not taken in our cash book. So that 4,000 is also to be subtracted from cash book balance. Amount paid to LIC on standing instructions, 4,000 rupees. Now if you remember, we had deposited certain checks in the bank for the amounts 5,000. There were two checks. Now we had deposited that checks. That means we had increased our balance of cash book. But naturally the bank will give credit only when they will receive it. So they have not still received it. So we must reduce this from our cash book balance. So this is checks deposited but not cleared. Checks deposited but not cleared. Again 5,000. Now let us total this. This will come to 18,700. And from this 18,700, if we reduce 9,100, we will get how much? We will get 9,600. Balance as per passbook, 9,600. So this is the way bank reconciliation statement is made. And if we take here passbook balance, if we start with passbook balance, since passbook balance is positive, we could have taken 9,600 here. Then all those items which have been added here, they would have been reduced, and those items which have been subtracted here must be added back, and then we would have reached 11,500 here. Okay, this is the way bank reconciliation statement is made. By chance, sometimes if there is overdraft in the bank, then you should take it here. Then you should take it here and then proceed in the normal way. Then proceed in the normal way. If total of this side is more than the total of this side, then it means again you will have balance on this side, which will again be an overdraft. And by chance if this side is bigger and total and the balance comes on this side. This means the balance has become positive. Okay, I would like to tell you one more thing, and that is, if we are preparing this bank reconciliation statement at the end of the financial year, then we must take into account all those items which we have come to know after receiving passbook, and prepare our cash book after making all these amendments. For example, if we have received interest of 200 rupees, we must pass an entry, bank account debit to interest. With that, in the cash book we will have 200 in the receipt column. Similarly, if we have received 2000 from Suman, again an entry should be passed for that, that is bank account debit to Suman. With this, in our cash book, in the receipt side, 2000 will come, so they will cancel out each other. They will cancel out what is appearing in the passbook. Okay. Similarly, bank had given us interest of 200. That should be taken into account. What shall be the entry for this? Bank account debited to interest received account. Okay. So after making all these entries, then after the amended cash book is prepared, then you should prepare bank reconciliation statement. Okay. I hope all this is clear to you. Thank you.